So, Lenskart, you know them. They're pretty much the undisputed king of eyewear in India, and now they're gearing up for a massive IPO. We're talking about a tech-driven retail giant that's become a household name. And today, we're going to break down what this public offering really means for anyone watching the market.
I mean, on the surface, the numbers look absolutely incredible. A classic high-growth story, right? But if you dig just a little bit deeper, there's a whole other story bubbling up from inside the company. And that leads us to the big question for this whole explainer. What if the biggest risk here isn't something you can find on a spreadsheet?
Okay, so first things first, let's get the official story straight. We've got to understand what Lenskart is and how it completely changed the game for buying glasses, not just in India, but now all over the world.
So, Lenskart kicked things off way back in 2010. And it wasn't just another online store or a chain of shops. It was both. This omnichannel model is their secret sauce. With over 2,700 stores across the globe and serving more than 12 million customers, its scale is just huge. They figured out how to blend the ease of online shopping with the need to, actually try glasses on in a real store.
So how do they pull all this off? Well, their secret weapon is what's called a vertically integrated model. Basically, Lenskart controls the whole shebang. They design their own frames, make them in their own factories, and sell them straight to you. By cutting out all the middlemen, they get total control over the price, the quality, and the entire customer experience. Pretty smart.
And you know what? That business model has led to some absolutely mind-blowing numbers. Lenskart's financial journey isn't just a story about growth. It's a story of a dramatic and, frankly, perfectly timed turnaround right before it's set to go public. Just take a look at this. The company's revenue went from around 3,800 crores in fiscal year 23 to a projected 6,600 crores just 2 years later. We're talking about revenue practically doubling in 2 years. That is just explosive growth, and it shows you how much people want what they're selling. But, and this is a big but, all that rapid growth didn't come cheap. The company was pouring cash into opening new stores and expanding around the world. In fact, as recently as fiscal year 2024, even with billions in sales, the company was still technically in the red, with a net loss of 10 crore rupees. And then, bam, they flipped a switch. In just 1 year, they swung from that loss to a net profit of nearly 300 crores. Think about that. Going from losing money to making a significant profit in a single year, that's a huge milestone, and it's exactly the kind of story that makes investors sit up and pay very close attention.
And hey, don't for a second think this is just an India story anymore. Lenskart has gone global in a big way. A massive 40% of its revenue now comes from outside of India. When they bought the Japanese chain Owndays back in 2022, it totally supercharged their presence in Southeast Asia and turned them into a real multinational player. All right, but here's where the story takes a turn. Because those shiny, glowing financials, well, they're only half the picture. While all this incredible growth was happening on paper, a very, very different story was starting to emerge from people on the inside.
This quote comes directly from a Reddit post written by someone claiming to be a Lenskart employee. They said they were posting it as a public service announcement before the IPO, and it alleges that this impressive balance sheet is being built on the back of a really grueling, tough internal culture. And it gets more specific. The post talks about things like 10 p.m. meetings being completely normal, zero respect for personal time, and a leadership style that's created a culture of fear where people are just too scared to speak up or push back.
And the criticisms aren't just about the work culture. The post also brings up concerns about product quality going downhill, with claims that the company is switching to cheaper materials. And then there's this potential red flag for investors, a huge dependency on China for supplies. Over 42% of its purchases. That's a big supply chain risk any way you slice it.
So this creates a real dilemma, doesn't it? How do you weigh these picture-perfect financial reports against really serious allegations about the company's internal health? You've got amazing numbers on one hand and these troubling stories on the other. This brings us to the crucial decision point for any potential investor.
The conversation around this IPO really splits into two different camps. Is Lenskart a ruthlessly efficient, well-oiled, profit-making machine? Or are all these internal issues a sign of a ticking time bomb just waiting to go off?
Okay, so let's look at the first argument. Believe it or not, some investors see this tough, aggressive culture, and they actually like it. One person put it bluntly, bad for employees means good for shareholders. From this point of view, it's a sign of a disciplined company that is absolutely laser-focused on the bottom line, which is what they want to see.
But then you've got the total opposite view. This side argues, hold on a minute, this is not sustainable. The thinking is that a company that burns out its employees and maybe cuts corners on quality is just setting itself up to fail down the road. They're worried it could be a classic pump and dump, where the stock price soars right after the IPO and then crashes once the internal problems catch up.
Now, amidst this whole debate, here are the hard facts of the deal. The IPO is raising fresh money for the company, about 2,150 crores. But a huge chunk of it is an offer for sale, or OFS. That's where existing investors and even the founders are selling over 13 crore of their own shares. This is a big deal because it means the early backers are cashing out, and that's always something new investors pay very close attention to.
So let's put all these pieces together. After all that, what are the key things you should walk away with from this story?
Okay, for the next 30 seconds, let's nail down the bigger picture. Lenskart is a story of conflict. On one hand, you've got this phenomenal growth story, a market leader that's finally and very profitable. On the other hand, you have these serious allegations about a toxic internal culture and maybe even slipping quality. So the core question for any investor is this: are the tough methods they use to get here a sign of a disciplined, winning company, or are they a fundamental flaw that's going to hurt them in the long run? This IPO isn't just a bet on eyewear, it's a bet on whether this aggressive, high-pressure model is built to last.
Which really leaves us with this one, final, critical question. In the world of investing, where numbers often shout louder than words, does a company's internal culture, how it treats its own people, truly matter if the balance sheet looks absolutely perfect?
Hey, if you found this breakdown helpful, please give it a like and subscribe to our channel for more deep dives just like this one. Thanks for watching.